If you had put $10,000 into Nvidia stock just 3 years ago, you'd be sitting on over $120,000 today. And if you'd put that same money into Palantir, you'd have nearly $4 million. Why? Because those companies had the perfect products for the fastest growing markets in the world. But here's the thing, Nvidia and Palantir are household names now. Everyone knows about them. So today, I want to talk about 3 smaller AI stocks that are quietly positioned to win big, and almost nobody is talking about them yet. I respect your time, so here's exactly what we're covering. CoreWeave, a next-gen cloud company with over 250,000 GPUs already being used by OpenAI, Microsoft, and Meta. Nebius, a full-stack AI cloud built for sovereign AI and sensitive data across Europe and the US. IREN, another AI infrastructure play with nearly 3 gigawatts of contracted power for AI data centers. And at the end, I'll tell you which one I think is the best buy right now. What these 3 companies have in common. CoreWeave, Nebius, and IREN are all Neoclouds, meaning they sell access to high-end GPUs and infrastructure purpose-built for AI workloads, like model training, fine-tuning, and inference. Neoclouds serve 3 main types of customers: AI labs building foundation models that need massive parallel compute, enterprises adding AI to their products and workflows who need low-latency, high-bandwidth infrastructure, hyperscalers like AWS, Azure, and Google Cloud that need overload capacity when demand spikes. So why do Neoclouds even exist? Because traditional cloud providers were originally built for CPU-based workloads, web servers, databases, email, transactions. That infrastructure is way too slow and too expensive to run modern AI models at scale. The market needs a new kind of cloud provider, one with dense GPU racks, ultra-fast networking, advanced cooling, and software optimized for AI, not websites. And the opportunity here is massive. The global Neocloud market is expected to grow nearly 30x over the next 8 years, potentially hitting $1 trillion by 2034. That's a compound annual growth rate of over 50%, roughly 3 times faster than the S&P 500. That sounds wild until you remember that traditional cloud computing is already a multi-trillion-dollar market. The world just needs an enormous amount of compute, and AI is going to represent 20 to 30% of all of it.
The risks you need to know. Before we go further, let's be honest about the risks, because all 3 of these companies share the same ones. First, they all spend massive amounts of capital up front on land, power, GPUs, and data centers. That means they depend on debt, convertible notes, or equity to fund growth until cash flows catch up, making them sensitive to interest rates and market sentiment. Second, they all compete directly with AWS, Azure, and Google Cloud, which are each spending hundreds of billions of dollars building their own AI infrastructure. Third, they're all heavily dependent on Nvidia. About 90% of their GPUs come from them. If Nvidia has supply issues or prioritizes the hyperscalers, all 3 companies feel the pain. And fourth, they all have significant customer concentration risk. CoreWeave, Nebius, and IREN all have multi-billion-dollar contracts with Microsoft. CoreWeave and Nebius also have major deals with Meta. Lose one of those customers and the impact is significant. These are volatile, high-growth stocks. You need to know that going in. But that volatility cuts both ways, and the upside potential here is enormous. CoreWeave, CRWV. CoreWeave is the clear leader of the pack right now. They operate 41 data centers purpose-built for AI, housing over 250,000 Nvidia GPUs across North America and Europe. They have more than half a gigawatt of active power and nearly 3 gigawatts of contracted capacity, enough to power over 1.7 million GPUs. Customers can rent those GPUs as bare metal chips or as full managed cloud instances, with CoreWeave handling the networking, storage, scheduling, and everything else. Their latest quarterly revenue hit $1.44 billion, up 134% year over year. But the real story is their backlog, which just reached $55 billion after growing 271% in a single year. That backlog is driven by multi-year, multi-billion-dollar contracts with OpenAI, Microsoft, Meta, and Nvidia itself. Speaking of Nvidia, CoreWeave has one of the most privileged relationships with them in the entire industry. 3 things stand out. CoreWeave is essentially Nvidia's launch platform for new chips. They get early access to products like Blackwell Ultra and Rubin, plus next-gen networking that reduces GPU underutilization. Nvidia has a $6.3 billion agreement to purchase any unsold CoreWeave capacity through April 2032, making them the buyer of last resort. Nvidia represents over 85% of Nvidia's public investment portfolio, and that number just went higher after Nvidia invested another $2 billion directly into CoreWeave stock. For investors, the message is simple. Nvidia isn't just CoreWeave's supplier. They're their launch partner, their financial backer, and their safety net.
Nebius takes a very different approach.
They're a full-stack AI cloud laser-focused on sovereign AI and regulated industries. Think healthcare organizations training models on patient records, or banks running fraud detection on sensitive transaction data. These companies need the best AI hardware and strict compliance with data regulations. That's Nebius' sweet spot. Their latest revenue came in at around $146 million, growing 355% year over year, with their core AI infrastructure segment growing closer to 400%. Management is targeting a $7 to $9 billion revenue run rate by the end of 2026, roughly a 13x increase, and about half of that is already under contract. On the technical side, Nebius punches above its weight. Their AI cloud platform, called Ether, includes a full software stack for training and inference, instance management, high-throughput storage, governance, and compliance controls. They were also the first cloud in Europe to run Blackwell Ultra systems at scale, and the first globally to deploy them with the latest generation of quantum InfiniBand networking. Infrastructure-wise, they currently have around 220 megawatts of connected power, which they expect to grow 4 to 5x by end of year, with over 2.5 gigawatts of contracted power lined up, a more than 10x capacity expansion. Their anchor contracts include a 5-year, $17.4 billion deal with Microsoft and a separate $3 billion deal with Meta. At this point, the only thing slowing their revenue down is how fast they can get new data centers online. If you're familiar with how Palantir built trust by tackling the hardest regulated markets first, defense, intelligence, healthcare, and then expanded from there, Nebius is running a very similar playbook, but on the infrastructure side. IREN, formerly known as Iris Energy, is a former Bitcoin miner that's rapidly reinventing itself as an AI infrastructure company. They're building large-scale, renewable power data centers across North America and converting that power into GPU clusters for AI workloads. So far, they've deployed over 23,000 Nvidia Hopper, Blackwell, and Blackwell Ultra GPUs, and they already have over 800 megawatts of active power with 2.9 gigawatts of total contracted capacity across the US and Canada. What makes IREN unique is their flexibility. Today, Bitcoin mining still makes up the bulk of their roughly $500 million in 2025 revenue, up over 160% year over year. But they can shift that same power infrastructure toward AI whenever demand calls for it. AI workloads generate far more revenue per megawatt, so as AI demand scales, IREN can capture that upside while keeping Bitcoin mining as a fallback. They recently landed a 5-year, $9.7 billion AI cloud contract with Microsoft, 200 megawatts of new Blackwell-class data centers in Texas, expected to generate about $1.9 billion in annual recurring revenue once fully online. By the end of 2026, IREN is targeting an AI cloud revenue run rate of around $3.4 billion, nearly a 7x increase in total revenues year over year, by scaling their GPU fleet from 23,000 to roughly 140,000 GPUs, and that would still only use about 16% of their total contracted power capacity, leaving enormous room to keep signing major deals well beyond 2026.
So, which one should you buy? Here's my honest take. CoreWeave is for the investor who wants proven scale. Biggest revenues, deepest backlog, most GPUs, broadest footprint, and direct backing from Nvidia. If you want the safest bet in the Neocloud space, CoreWeave is it. Nebius is for the investor with a higher risk tolerance and a long time horizon. Smaller today, but growing faster than anyone, and they're playing in regulated markets that are harder to crack, but far more defensible once you're in. IREN is for the investor who wants optionality. Nearly as much contracted power as CoreWeave, a massive Microsoft deal, and a built-in hedge through Bitcoin mining. If your portfolio is already heavy on AI, IREN adds real diversification. Personally, I'm happy holding all three. But if I had to pick just one based on undervaluation relative to capacity and upside potential, I'd go with IREN. Their power capacity is enormous, their Microsoft deal is underappreciated, and I think the market hasn't fully priced in what happens when even a fraction of that 2.9 gigawatts shifts to AI. If I were building a portfolio from scratch, though, I'd start with CoreWeave, because Nvidia's backing alone de-risks the investment in a way that's genuinely rare at this stage of the market. Let me know in the comments which one you're going with, or if you want a deeper dive on any of these three. And if you found this useful, hit the like button and subscribe. It really helps the channel and tells me to keep making content like this. Until next time, the best investment you can ever make is in yourself.